Welcome to our deep dive into Redwire Corp. We're going to take a look and see if this space stock is worth your investment, and we got a ton of research to go through.
Yeah, we've really taken a Warren Buffett approach here, looking at the fundamentals.
Exactly, and what's really interesting is that Redwire isn't actually building rockets themselves.
Right.
They're more focused on building all the essential components, the nuts and bolts that space missions need to be successful.
Yeah, it's really fascinating. They're aiming to be that one-stop shop for all things space infrastructure. So think about things like the solar arrays that power spacecraft,
Okay.
the navigation systems they use, even 3D printing technology for use in space.
It sounds like they've got their hands in a lot of different areas. Is that a good thing, or does it make them a little bit too spread out?
That's a great question. It's definitely something to consider as we go through all this research.
Yeah.
But their approach is what they call heritage plus innovation. They've acquired companies with decades of experience in the space industry. But they're also investing heavily in cutting-edge technology. And so this gives them kind of a unique position where they have that foothold in both those established markets and the emerging ones.
So they're not just kind of riding the coattails of these old companies. They're really trying to push the boundaries in space technology.
Exactly.
Now, when it comes to customers, who are they primarily working with? Is it mainly government contracts, or is there a commercial side to their business as well?
It's actually quite diverse, which is pretty interesting.
Okay.
So, of course, they work with government agencies like NASA,
Right.
but they're also working with commercial space companies like Virgin Galactic. And get this, they're expanding internationally as well.
Oh, wow.
Yeah, so that broad reach, it helps them mitigate some of the risks
Yeah,
by not relying on a single customer or even a single market.
that makes sense.
But it also means they need to be really adaptable and responsive to a wide range of demands.
Okay, so their business model seems to be based on this wide reach across the entire space industry. But how is all of that organized within the company?
That's a good point. They've actually organized themselves into distinct areas, and each of these addresses a key aspect of the space ecosystem. So they've got a division for space commercialization,
Yeah.
one for digitally engineered spacecraft, another focusing on on-orbit servicing and manufacturing. Then there's their work on advanced sensors and components, and a whole segment dedicated to space domain awareness and resiliency.
It sounds like they're really covering all the bases when it comes to space infrastructure.
Yeah.
Now, before we move on, I want to shift our focus a little bit to the leadership of this company.
Okay.
What can you tell us about Redwire's management team and their overall strategy?
So leading the charge is Peter Canito. He's the chairman and CEO.
Okay.
And he's really been emphasizing the strategy that prioritizes both growth and profitability. And, that can be a little bit of a balancing act.
Yeah, trying to achieve both of those things at the same time can be tricky. Is there anything unique about Redwire's approach?
Well, a key part of their growth strategy has been acquisitions.
Okay.
So they've been acquiring companies that complement what they're already doing.
Right.
And this allows them to quickly expand into these new markets. A recent example is their acquisition of Edge Autonomy, which is a company specializing in uncrewed aircraft.
Wait, uncrewed aircraft? I thought we were talking about space.
Yeah.
How does that fit into their overall focus on space infrastructure?
That's a good question. It's all part of a bigger push to be a major player in what's called multi-domain autonomous technology. So think of it as extending their expertise from space down to Earth.
Okay.
It creates this more integrated approach to autonomous systems. And this acquisition, they're expecting it to significantly boost their revenue, profitability, and cash flow. But, acquisitions can be risky. Integrating all these different companies can be challenging.
Right.
And it often comes with increased debt.
So it's not as simple as just buying up a bunch of companies and then watching the profits roll in.
Exactly.
There are definitely some potential pitfalls along the way. So they're aiming for this growth. But are they actually achieving it?
Right.
What kind of financial performance have they been delivering?
Well, when you look at their revenue growth, it looks pretty impressive.
Okay.
In Q2 2024, their revenue jumped by 30% year over year,
Wow.
reaching $78.1 million. And while that pace slowed a bit, they still saw a 9.6% year-over-year increase in Q3, hitting $68.6 million. So that's pretty healthy expansion for any company.
Yeah, especially in a volatile industry like space.
Exactly.
So revenue's going up, which is good. Is the bottom line keeping pace?
Well, that's where things get a little more complicated. Despite that strong revenue growth, they've actually reported net losses in these recent quarters.
Okay.
So it really begs the question, Can they translate that top-line growth into actual profits?
Yeah, that's not really what you want to see when you're evaluating a company's financial health. What's causing these losses?
Yeah.
Are there fundamental problems with how they're doing business, or is there something else going on?
Well, the research points to a few different factors.
Okay.
Some of these losses are what are called non-cash losses. So these are basically accounting adjustments that don't really reflect actual cash flowing out of the company.
So it's not necessarily a sign that their core business operations are in trouble.
Right. Things like changes in the value of their warrant liabilities or a lawsuit they're dealing with fall into this category.
Okay, so what about the other losses that aren't these non-cash losses?
Well, some of the losses are tied to these significant investments they're making to fuel future growth. And remember, they're acquiring companies, developing new technologies, expanding into new markets. All that costs money in the short term.
Yeah, even if they expect it to pay off eventually.
Exactly.
It sounds like there's more to the story than just looking at those net loss figures. What other financial indicators should we be considering to really get a clear picture of their overall health?
You're absolutely right. It's important to look beyond just the bottom line.
Yeah.
And we need to dig into metrics like gross margin, operating margin, and return on equity.
Yeah.
And see how efficiently they're managing their costs and generating profits. And that's something we'll definitely delve into further in the second half of this deep dive.
Sounds good. This is a great place to pause for now. We've covered a lot of ground. Coming up, we'll tackle some of those key financial metrics, gauge what the market thinks about this company, and dissect that intriguing ownership structure. We'll even do a SWOT analysis to identify those crucial strengths, weaknesses, opportunities, and threats facing Redwire. Stay tuned. All right, so we're back and ready to dig a little deeper into those financial metrics for Redwire. You mentioned earlier gross margin, operating margin, and return on equity as some key things to look at.
Exactly.
Can you break those down for us a little bit more and explain maybe what they tell us about Redwire's performance?
Yeah, definitely. So let's start with gross margin. Gross margin is essentially telling us how much profit Redwire makes on each dollar of revenue after accounting for the direct costs of producing their products and services. So think about materials, labor, those kinds of things. Operating margin takes it a step further by factoring in their operating expenses, things like marketing and administrative costs. So this gives us a clearer picture of their profitability from their core operations. And then return on equity, or ROE, measures how effectively they're using shareholder investments to generate profits. It's a good indicator of their overall financial efficiency.
Okay, so those are some of the key metrics to watch. What do those numbers look like for Redwire? Are those numbers healthy, or are there maybe some warning signs there?
Yeah, that's where things get a little bit interesting.
Okay.
While their revenue growth has been strong, their margins and ROE haven't quite kept pace. So their gross margin has been kind of hovering around 20%, which is decent, but it's not spectacular. And then their operating margin has actually been negative in recent quarters, which indicates that their operating expenses are exceeding their gross profit. And their ROE has also been negative, suggesting they're not yet generating a positive return on those shareholder investments.
So they're growing, but they're not necessarily growing profitably, which is obviously a bit of a concern. What about their debt levels with all these acquisitions? I imagine they've taken on a fair amount of debt. Is that something investors should be worried about?
Yeah, debt levels are definitely something to keep an eye on. Their debt-to-equity ratio has been increasing, which means they're using more debt to finance that growth. And, some level of debt is pretty normal for a growing company.
Right.
Even healthy in some cases.
Yeah.
But too much debt can really become a burden, especially if their profitability doesn't improve.
All right, so we've got this kind of mixed picture here. Strong revenue growth, but maybe some lagging profitability and those increasing debt levels.
Right.
Let's shift gears a little bit now and talk about what the market thinks about all of this.
Yeah.
What's the overall sentiment around Redwire? Are investors generally bullish? Are they bearish? Or somewhere in between?
Yeah. So to kind of gauge that market sentiment, we can look at things like analyst ratings, price targets, and short interest.
Okay.
So analyst ratings give us an idea of whether professional analysts think the stock is a buy, sell, or hold.
Okay.
Price targets tell us what those analysts think the stock is actually worth.
Right.
And short interest tells us how many investors are betting against the stock.
Okay.
Essentially expecting it to go down in price.
So what's the verdict from the analysts? Are they optimistic about Redwire's future, or are they maybe sounding the alarm bells?
Well, it's interesting because the analyst coverage on Redwire is relatively limited, probably due to that concentrated ownership structure we've talked about,
All right.
which we'll discuss in more detail later. But there are only about 7 analysts currently covering the stock.
Only 7. That seems really low for a company operating in such a hot sector-like space.
Yeah, you're right. It is a bit unusual.
Okay.
But even with that limited coverage, the analysts have set price targets ranging from about $21 at the low end to $31 at the high end, with an average around $26.50. So, this suggests a cautiously optimistic outlook.
Okay.
But it's important to remember that, analyst opinions can vary quite a bit.
Right.
And they're not always accurate predictors of future performance.
Analyst opinions are just one piece of the puzzle. What about that short interest? Are there a lot of investors betting against Redwire?
Yeah, that's where things get interesting again.
Okay.
The short interest on Redwire is actually quite high. Over 20% of the float is currently sold short. So this means a pretty significant portion of investors believe the stock is overvalued and are expecting it to decline.
Wow, over 20%. That's a lot of bearish sentiment out there. Why are so many investors betting against Redwire, especially if the analysts are generally positive?
Well, there could be a few factors at play. Some investors might be concerned about those recent losses, the increasing debt,
Right.
and the execution risks associated with that aggressive acquisition strategy. Others might be a little wary of that concentrated ownership structure, which we'll talk about more later,
Right.
which can limit liquidity and create some volatility in the stock price.
So we've got this kind of tension between those cautiously optimistic analysts and that pretty significant short interest. What else should we think about when we're evaluating market sentiment?
Well, it's also helpful to look at recent news and developments. So, for example, one firm, H.C. Wainwright & Co., they recently initiated coverage on Redwire with a buy rating.
Okay.
And there have been a few upward revisions to those price targets. So this could signal that some investors are starting to see value in the company despite the recent losses.
That's encouraging. Are there any other news snippets that kind of caught your eye?
Yeah, there have been some reports of insider selling, which, can sometimes be a red flag for investors. Filings show that Genesis Park 2 LP, which is one of the key entities with a large stake in Redwire,
Okay.
has been selling a significant number of shares.
Insider selling, that definitely raises an eyebrow. Is this a sign that those with insider knowledge are losing faith in the company?
Not necessarily. It's important to remember that large entities like Genesis Park 2 LP often have their own investment strategies and liquidity needs.
Okay.
And these sales could just be part of a routine portfolio rebalancing or a way to meet tax obligations. It's not always a sign of panic or lack of confidence in the company.
So it's not a clear signal one way or the other.
Right.
So taking all of that together, what's your overall assessment of the market sentiment around Redwire? Is it positive, negative, or just too murky to call?
Yeah, I'd say the market sentiment appears to be a bit mixed. They're both bullish and bearish signals. Investors are weighing the company's strong revenue growth and, that potential of the space industry.
Yeah.
Against those recent losses, the increasing debt, the high short interest, and that uncertainty around their acquisition strategy.
Okay, so we've got this mixed bag of opinions and indicators.
Yeah.
Let's unpack that concentrated ownership structure you mentioned earlier. You said it could impact liquidity and potentially create volatility in the stock price. Can you explain why that is?
Sure. So Redwire has a somewhat unusual ownership structure compared to most publicly traded companies.
Okay.
They have about 67 million shares outstanding, but insiders own a whopping 75% of them.
Wow, 75%. That's a huge chunk of the company.
Yeah, so this means a small group of founders, executives, and private equity entities have significant control over the company.
Wow, and how does that compare to like the average publicly traded company?
Yeah, it's definitely on the higher end.
Okay.
It's not uncommon for companies that, have come through private equity-backed deals
Right.
to have a concentrated ownership structure.
Okay.
But it does mean that the public float, the shares available for regular investors to trade, is relatively small.
Okay.
Only about 25% in Redwire's case.
So the vast majority of those shares are locked up, with those insiders leaving a relatively small number of shares for everyone else to trade.
Exactly.
That makes sense why you said it could impact liquidity. What are the implications of this for investors who might be considering buying Redwire stock?
Well, with that smaller public float, the stock can be more volatile. Large buy or sell orders can have a bigger impact on the price, especially if there aren't enough buyers or sellers out there to kind of absorb those trades.
It's something to be aware of, especially if you're looking for a stable, low volatility investment.
Exactly. And it's also worth noting that institutional investors,
Okay.
like mutual funds and pension funds, only own a small portion of that public float,
Okay.
about 8%.
Hmm.
And this could be because some institutional investors prefer companies with a wider public float and a more diverse shareholder base.
Okay, so we've got this concentrated ownership structure that could lead to some increased volatility and potentially deter some institutional investors. Let's wrap up our discussion of Redwire by talking about some of the risks they face. We've already touched on some of them, like their recent losses, increasing debt, and those execution risks associated with their acquisition strategy. What are some of the broader risks that investors should be aware of?
Well, I think one of the biggest risks for any company operating in a rapidly evolving industry like space is technological disruption. New technologies could emerge that make some of Redwire's offerings obsolete or less competitive.
That's a valid concern. The space industry is moving so quickly, it's hard to predict what that next big breakthrough will be.
What about competition? We haven't talked a lot about their competitors. Who are they up against, and how does that impact their outlook?
Yeah, so Redwire faces competition from both established giants and up-and-coming startups.
Okay.
So on one hand, you've got those behemoths like SpaceX, Blue Origin, Northrop Grumman.
All with vast resources and experience. And on the other hand, you've got a wave of innovative startups vying to disrupt the industry with new technologies and business models.
So they're caught in the middle, facing pressure from both ends. How can they compete effectively in such a dynamic and challenging environment?
That's the million-dollar question.
Yeah.
They're going to need to continue to innovate, execute their acquisition strategy, effectively manage their costs carefully, while also navigating this complex regulatory landscape and the cyclical nature of government spending.
Right. It's not going to be an easy path forward. So to kind of synthesize all of this information, let's do a quick SWOT analysis. Identify Redwire's key strengths, weaknesses, opportunities, and threats.
Okay.
This will give our listener a concise overview of the company's strategic position.
Sounds good.
So let's start with their strengths. What are some of the things that Redwire is really good at?
Well, one of their biggest strengths is their diverse portfolio.
Okay.
They offer a wide range of products and services,
Right.
which helps them mitigate risk
Yeah.
and tap into multiple segments of that space market. They also have a strong track record of revenue growth, demonstrating their ability to capture market share in a rapidly expanding industry.
All right.
Their heritage plus innovation strategy is another key strength, allowing them to leverage that experience while also pushing the boundaries of technology. And then finally, they have an experienced management team with a deep understanding of the space industry.
Okay, so they've got a solid foundation to build on. What about some of their weaknesses? Where are they vulnerable?
Well, those recent losses are definitely a weakness, raising some concerns about their profitability
Right.
and their ability to translate that revenue growth into bottom-line results.
Okay.
Their dependence on government contracts also makes them susceptible to changes in government spending priorities,
Yeah.
which can be unpredictable and subject to political whims.
So they need to work on improving their profitability and diversifying their customer base a little bit.
Yeah.
What about opportunities? Where do they see the biggest potential for growth and expansion?
Well, the space industry itself is a massive opportunity. It's one of the fastest growing sectors in the global economy,
Right.
with projections for continued expansion for years to come. And Redwire is well positioned to capitalize on this growth,
Okay.
especially with their focus on providing that essential infrastructure for a wide range of space missions. The increasing commercialization of space is another major opportunity.
Right, with those private companies getting involved.
Exactly.
Yeah.
So that opens up new markets and customer segments for Redwire to target. And then their international expansion is also a significant opportunity,
Okay.
allowing them to reduce their reliance on any single region
Right.
and tap into these growing space programs around the world.
So plenty of opportunities out there for Redwire to seize if they can play their cards right. But what about threats?
Yeah.
What are some of the biggest challenges they'll need to overcome to really drive that long-term success?
Well, we've already touched on some of those key threats, like
Right.
technological disruption,
Yeah.
competition from those established giants and nimble startups, and the potential for changes in government spending.
Okay.
But there are also some broader economic risks to consider. A significant economic downturn could hurt government and commercial spending on space programs,
Yeah, that would definitely have an impact.
which would directly impact Redwire's revenue and profitability. And then the increasing energy demands of the space sector also pose a challenge for the entire industry,
Right.
including Redwire. As space activities expand and new technologies emerge, the need for those reliable and sustainable energy sources in space will become even more crucial.
All right, so we've covered a lot of ground in this deep dive, from their business model and management team to their financial performance, market sentiment, ownership structure, and those risks and opportunities they face.
Great.
We've even done a SWOT analysis to kind of assess their overall strategic position. But what does all of this mean for our listener who's trying to figure out if Redwire is a good investment?
Right, well, that's the million-dollar question.
Yeah.
And as with most investments, there's no easy answer.
Okay.
Redwire operates in an exciting and rapidly growing industry,
Yeah.
but they also face significant challenges. They've got a lot going for them, but there are also some valid reasons for caution.
Right. It's a complex picture with both potential rewards and inherent risks. We'll wrap up this episode with a final takeaway for our listener.
Okay.
And a thought-provoking question to kind of leave them with after a quick break. So we've really explored Redwire from all angles. We looked at their technology, their financials, how the market perceives them, even the people at the helm. The big question is this the space stock to put your money on?
It really comes down to each individual investor, their risk tolerance, and what their investment goals are. I mean, are you someone who is really excited about the potential of the space industry, and are you willing to accept the volatility that comes with a company like Redwire? Or are you looking for something a bit more stable, a company with maybe a proven track record of profitability?
Yeah, and I think another important thing for our listeners to keep in mind is that Redwire is still relatively early in its growth. They're making big bets on acquisitions and these new technologies.
Right.
And that could lead to some big rewards down the line, but it also comes with some inherent risks.
Exactly. It's almost like you're investing in a rocket launch. There's that incredible potential of, reaching new heights, but there's also that risk that things could go wrong along the way.
And while their revenue growth is definitely impressive, we can't just ignore those lingering losses and those rising debt levels. They're going to need to show a clear path to becoming profitable if they want to attract new investors and justify what they're currently valued at.
Absolutely. And one thing that wasn't really explored in a lot of the research we looked at was the sustainability of Redwire's growth. How are they going to handle this increasing competition from both those big players like SpaceX and Blue Origin and all these smaller startups that are popping up? Can they keep growing at this pace without sacrificing profitability?
Yeah, those are really important questions. The space industry is getting more and more crowded, and Redwire is going to have to prove they can carve out a place for themselves and be successful over the long term. I think for our listeners, this deep dive has given you some really good information and hopefully a framework for evaluating Redwire. Make sure to check the episode description because we've included links to all the sources we use so you can take a closer look for yourselves.
And if you want even more insights like this, don't forget to subscribe to the Stock Analytics AI YouTube channel. We're always breaking down complex topics like this, and we want to help you make better, more informed investment decisions. And don't forget to check the comments for stock suggestions related to this topic.
Yeah, hit that subscribe button and join our community. As always, just a quick reminder that this podcast is for informational purposes only. This is not financial advice. Please talk to a qualified advisor before making any investment decisions. And all of the information we've discussed today has been generated using AI technology and publicly available data. Do your own research as well.
Until next time, keep exploring, keep learning, and keep reaching for the stars.